Quick one on Bitcoin. We can see this is the target that we had drawn for the market to draw on. This is one on the, we are here on the 30 minutes time frame. We can go back to the high. This one is the 4-hour time frame. Now on the monthly, we saw that we had a first break of structure here. We are following the bearish version of the standard trading model. We represented like this. Liquidity sweep here, then the first break of structure, then this high is where we take our entry to potentially smash these lower lows. So we can see we had first break of structure right here, the sweep of liquidity. Then this is where we should anticipate for a sell to take these lower lows, but we can always take partial profits. Remember on the monthly. Dropping down on the daily, the same pattern is repeating again. We see this is the liquidity that we swept on the monthly. This is the first break of structures high, and coming here we can see the first move. We get the first break of structure here, then it's high right here. This is where we're supposed to take our sell, anticipate for a sell, as long as this high is not taken for this lower low to be smashed. We can drop down on the lower time frame to see what happened here. On the 4-hour time frame, this is what is happening. You can see rejections, a lot of rejections. We have the liquidity was swept. First time there's a rejection, then we had a manipulation right there, and then boom, that's where we ran down, and we had kind of form here an FVG, see right here, showing that this market has an intention of continuing downwards, where we can get set some liquidity here, maybe around this zone here, before we can continue up, or we can even move for this lower lows. Dropping down on the 30 minutes time frame, let's get a clear breakdown on this area. We can see following the bearish version of the standard trading model, which we represented like this, which we said we did a sweep of liquidity, the first break of structure, then this high, this is where we take our sell order to potentially smash these lower lows. We can see now on the 30 minutes time frame that we had a sweep of liquidity. A sweep of liquidity, yes, but I also insisted after the sweep of liquidity should wait for a manipulation before we start to react. You can see a manipulation here. What is the logical reasoning for this manipulation? You can see after this liquidity was swept, we came down, we had a liquidity here hanging around. This acts as a defender, and then right below it we had a goalkeeper, the market reacting off of this goalkeeper. And what is our thinking after the goalkeeper is swept? Then we should be reaching for the next liquidity, for next external liquidity, and this is the external liquidity that we should be targeting, right? After this guy is taken, then we can look of all this move here, all this leg here. We don't have any other liquidity that has not been swept that we can, the market can be stopped from smashing our targets. So after this manipulation, we should start anticipating for a sell. So we find the first break of structure. Find first break of structure that you can see. Train myself to find out. You see it's right here. Then it's higher is above this inside bar, like a little inside bar. That's why we take our short and our stop loss above this high. That is the logical reasoning for this model. But I also insisted, trained myself that taking my trade here and having my stop above here is a bit of big risk exposure. So I wait. So this pattern here is the pattern that I've just insisted for quite some time. If I don't find a clear first break of structure over this leg here that is very closer to my stop loss area, I'm very keen to find out this setup here, this pattern here, which I represented in some video like this. You're likely to sweep liquidity first, then we go set your order there, then some goalkeeper is mitigated, then boom, right down. This is exactly what is happening here. Set some liquidity here, there's a set your order right here, and stop loss above this guy. At least this risk exposure is smaller than setting order right above here. That is it. So we order was triggered and we rode to the target. Ta-da! Target, right? And seeing over this leg, we can see all this liquidity was mitigated. So we just came to for this guy. Ta-da! We formed a clear market structure shift right there, right? So this this shows us an intention of the market to, it's clearly bearish, and you can see what is happening here. It's some liquidity swept here. The market is reacting off of some fast break of structures, right? And for someone who's asking whether their strategy is working on the lower time frames, 5 minutes, 15 minutes on scalping, you can scalp too, because this is just a refinement. You can see I just explained here on the 30 minutes time frame, but dropping down on the 5 minutes time frame, it's just a fractal nature of markets. You can see there was some liquidity here. This liquidity was taken. We got a manipulation here, right? Maybe towards trying to mitigate this defender. We got a sweep of liquidity, the manipulation here. This manipulation, then we first get a market structure shift, a very clear one, right? So then on this leg, we should look for the first break of structure. Where is the first break of structure lie? Yeah, find out on the lower time frame, maybe on the 1 minute time frame, and we can see liquidity was taken, and some defender, goalkeeper was mitigated, and boom, we rode up to smash these highs. There's also here, this is the guy that I think I marked this guy as the first break of structures high, and the first break of structure was around here. So you set your order here, stop loss above here, and ride the market to these targets. But this is a big risk exposure, right? So what can happen is that after the sweep of this liquidity, where the market to go down, then you look for the first break of structure or this leg, which you just find around here. Then we mitigate and you roll the market. And here's liquidity, boom. Take your money and run. That is it. That is exactly what is happening on this market, and it is what it is. You can see liquidity was taken here. A lot of liquidity was taken here. Then this guy, another liquidity was taken here. After this liquidity was taken, then we mitigated this a goalkeeper. Should look for the first break of structure along this leg here, which is around here, right? Then it's high around here, but you can see we get some liquidity lying here, which we just took, and we barely swept this high. and we write down. So it's a matter of training yourself on how you can scalp on your favorite currency pair, and you will get to grasp every bit of it. Everything here is explainable. It can be explained using the model, and I just got to practice to refine the model, and everything will be good. Thank you so much, and just wanted to give a quick update of this. If you like this kind of content, you can always like the video, share the video, and let's try to grow together. If you also like that we can connect and we can get to communicate, you can always request for my contact so that we can share our opinions on these markets. Thank you so much, and take care. Bye.